emerging markets is where all the rout is, emerging market is where all the selling is. We've put behind a very dark quarter of price performance where emerging markets had plunged with record speed, and emerging market currencies also were literally all over the place. So Bhuvina is standing by with a quick summary of how emerging market flows currently are stacked up.
The last few days, in fact, this year itself has not been the best year for emerging markets. We have seen this flight of capital of sorts coming in the year 2018 away from emerging markets. So if you look at it on a year-to-date basis, on a month-to-date basis, we have seen mostly negative flows coming in for emerging markets. So India saw a flow of 793 crore rupees. Indonesia as well declined a net outflow of 3,615 crore rupees, as did Malaysia of 2013 crore rupees. On a month-to-date basis as well, it's red across the screen, save for Brazil, which did see that bout of recovery come by. So marginal net inflows coming in for Brazil, which is 353 crore rupees of net inflows witnessed. And on a week-to-date basis, however, the numbers still look a little more encouraging. Trickles of here and there net inflows, again, seen in Brazil, which has continued the good performance, and also for that matter, even in Indonesia. So mostly we've seen negative, outflows come by on a year-to-date as well as on a month-to-date basis. Last week, however, some improvements here and there in the flows. But the flight to safety is something that we want to talk about, because one thing is for certain, that with the entire trade war scenario coming by, perhaps investors across the globe are looking for safer shores. And naturally, emerging markets, which as well will be victims to this entire US-China trade war, would not be the safest, place to perhaps park your money. That's perhaps what investors are mulling. And there's also the fact that the US dollar as well has strengthened significantly on the back of these trade wars, on the fact that even US data, the PMI data for last month, which was released, had been encouraging. So that as well is something that has led to money being taken out of EMs, perhaps being parked into DMs.
Okay, and who better than Laurence Balanco to really give us a direction of where India and the world is headed? Let's welcome him on board. Laurence, hi, morning. Good to chat with you. Thanks so much for taking the time out. Laurence, you've often been quoted as saying that India, especially the Nifty index, the benchmark index that is likely to see further scalability, and the uptrend is very much intact. We're almost shy of that all-time top on the Nifty. We're already at that 11,000 mark. Do you think the uptrend is still intact, or do you think the uptrend could be capped from these levels?
Morning. No, definitely still intact. We've seen good momentum. You've seen the MSCI India Index continue to outperform the MSCI Emerging Market Index. And in local currency terms, we think that January peak will be taken out, and we're still running with a 12,000 upside target for the Nifty.
No, I'm sorry. Are you saying that 12,000 is the maximum Nifty could go? I just missed the last part of your answer.
No, so that's the upside target. So we were flagging the breakout from mid-2017. So basically the Nifty had been in a trading range below the 8,500, 9,000 area from 2015 to 17. That breakout gives us an upside target of 12,000. So that is the target level that we still focus on, where we think this trend can continue to move towards.
Okay. India is outperforming emerging markets. Do you think that outperformance is here to stay, or in general, do you think emerging markets are a hotspot and they will continue to slide and they will continue to remain under pressure?
Well, I think the broader emerging market basket is still under pressure, and we haven't seen support come through for the relative performance of the broader emerging market. Within that, though, India, after underperforming through 2017 and early 18, we've seen that now break out. So I think the India relative outperformance should continue, and it's supported both in the absolute and relative terms.
Laurence, since you've set out the Nifty target of 12,000, and that you believe is going to be the top of the range, what about this dichotomy which is playing out in the Indian equity markets, wherein the benchmarks are holding out and they're just close to that all-time top, and the broader end of the market continues to be beleaguered? Do you think this divergence would remain, wherein the benchmarks hold through and the mid and the small caps continue to peg back?
Yeah, I think part of the underperformance of the mid and the small cap is the international flow back into India on the relative outperformance that you've seen. So you've obviously seen China underperform recently. So I think India and Indian large cap stocks and quality names have outperformed with fund flows back into India because of the relative outperformance. But I think this dispersion that you've seen on performance, you can see that globally. And if you just take the global or the emerging market indices for that example, you've got India close to breaking out, you've got Taiwan moving to the highs, but we've got the Shanghai Composite down 20%, you've got the H-shares down 20%, Brazil was down 20%, so you're seeing this dispersion and selectivity continue to develop, and that's typically what happens when you get these maturing trending phases in global markets.
Okay.
Laurence, what one has seen is that it's been a very concentrated move even within the Nifty, right? It's been those 10 to 15 stocks which have formed the leadership group. Do you sense that the leadership is going to remain with the Reliance Industries, with the IT pack, with leaders, with a concentrated move coming in from TCS? Or do you think in the run up to 12,000, it's going to be a more broad-based move and some of the other stocks also you foresee catching up?
At this stage, we think the leadership groups will continue to drive the index up to this level. But as I said before, typically the more mature you get, the more selective markets become, and that is how you get to the 12,000 targets, is by this leadership group driving it up. I don't think you'll see a lot of rotation or new leadership coming through until we get a major setback where we can reset the trend. But for now, up to the 12,000 levels, look for the leadership groups to drive the market higher.
Laurence, what is your take on the 10-year paper? Do you think at 3% the US 10-year Treasury has topped out?
Yeah, we've been flagging that the attempted breakout in April on the 10-year yield above 3% was a false move on the back of momentum, not confirming the highs. You also had speculators net short the T-note futures, so that's bond prices, and that all set up for a rollback. So our base case is that the 10-year yield can work its way back towards 2.62% and essentially be in a broader trading range. On a longer term side, the charts do suggest that you're getting yields base out, but over the next 6 months, I think they'll remain range bound below that 3% area.
How bad do you think it could get for copper and other important commodities before it gets better? Because Laurence, this is a very very strange kind of a situation. You have strength in the dollar index and you have weakness in the commodity. You have outperformance in select emerging markets, but even though there is select outperformance in emerging markets, US markets are sitting at a record high.
So, as I said before, I think the selectivity is just a sign of a mature trend, and we typically will see that towards the ending phases of uptrends. On your question on commodities, I think the worst right now is behind for that initial breakdown in copper, so you're starting to find support at this 280, 277 area. I think on the Brent side, we're now capped out at $80, and we'll see Brent putting back towards the $65, $68 area, and that's where we'll get a trading range develop between 65, the bottom end of the oil, and 80, the top end. But in the short term, I think now oil has downside risk back to the 65. So again, you can see the sort of rotation and selectivity that's going through even on the commodity side.
Earlier notes you've talked about as to how Yes Bank offers an attractive risk reward at this juncture. Does that call still hold true? They've got a mutual fund license coming in by, and you've already seen a sharp move in the stock.
Yeah, although if you look at it, basically since 2017, the peaks that we made back in September, the stock's been range bound, and we got the momentum move late last week. So with momentum confirming this new surge higher, yeah, we do believe that there's more upside for the stock.
Laurence, in general, where do you think there are secular trends in India? I mean, is it private banks? Is it private NBFCs? Where do you think that technically the stocks are in a sweet spot? And, pretty much what we've seen in HDFC Bank or Kotak Mahindra Bank, those kind of trends are intact for next couple of years.
Yeah, I mean, I think if you look at the key driver on the longer term base, and a very similar pattern to just the broader Nifty index has been the Nifty Banks Index, which broke out a bit early in 2017, and we get a 32,500 target for that index. So I think that the banks are a key component in driving the longer term uptrend, and that remains intact.
Laurence, great speaking with you. Thanks so much for taking the time out and joining in today.
Thank you.
Thanks. Okay, that's Laurence Balanco from CLSA stating that the upside target of 12,000 remains intact in the Nifty. And yes, this dichotomy between the broader end of the market and the benchmark indexes is here to stay. He likes Yes Bank, and even after the swift move in the stock, he does believe that the breakout supports on the stock with an upside target of 467 to 470 remain intact.